Nobody plays the hits like this, brother.
You already know.
Yeah. Into the Midday Lounge with the Midday Lover.
Oh, yeah.
Jackie Tramel and the Midday Crew, Crystal and K. Rose.
Yep, that's my crew. Hey.
Welcome back to the Midday Lounge, Global RnB 96.3, the real deal in digital radio. Oh man, say listen, I got my co-host, she's out today. She had to play a little hooky on me, but that's okay because I still wanted to bring you an outstanding show. It's a beautiful Thursday afternoon. So some things that's been on my heart and mind lately as we go through these series, we've been talking about funerals. We're talking about lifelong decisions that's going to actually impact your family. So today's show, what I wanted to actually bring to people was I wanted to talk about something that most young people don't always think about, or most people don't think about in general, and that's life insurance. Somebody came and got me up. They scooped me up a long time ago and taught me the benefits of having life insurance. So today I got a special guest in the building, man. I got Joe Taylor in the building.
Hey.
Hey, how you doing today, brother?
What's going on, brother Jackie? Thank you for having me, man. I feel like I'm at home right now.
Hey man, I just appreciate you even giving me the honor for me to interview you so we can talk to the masses, man. What I want you to do, man, just tell the people a little bit about yourself right now, man.
A little bit about me, man. I don't even know where to start. So I'm a father, I'm a husband, a follower of Christ, an entrepreneur. I'm a little bit of everything, right? But the number one thing that really, stands out is this: that I'm a person who just wants to help people, Jackie.
Man, that's beautiful.
I just want to help people. That's all.
Man, servant leadership, man. That's what I'm talking. I can definitely get behind that, brother.
That's it.
So I know you are seasoned. You seasoned the game of life insurance, man.
Yeah.
So if we wanted to, this is what I say. Can you give the listeners a brief introduction on what life insurance really is for some of our listeners that just don't know what it is and never even heard of it? They've been on a rock somewhere.
So life insurance, I'm gonna try to make it as simple as possible, right? Because if you're anything like me, you don't like things that are complicated. So life insurance, man, in a nutshell, I look at it it's a little bit of everything, all right. So it could be an income replacement, right?
Okay.
You can have it for funeral expenses. You can have it, as a living benefit life insurance policy. A lot of people don't know about the living benefits of life insurance because everybody thinks life insurance is for death. And
Okay.
don't get me wrong, yes, that's just part of it, and that allows not just your family to have a legacy. This is what we like to call in our community, especially, leaving a legacy. I want to leave a legacy to my family. So it's a little bit of everything. So I can't just say it's just this one thing because, to be honest with you, it depends on what is it. What do you want to do with this? What do you want this policy to do for you?
Okay.
That's the question.
Man, that's the question. Okay. All right. So
you know what I mean? Like, I don't know I hope I answered it because it's not a one size fit all type of thing. It depends on what you're trying to use it for.
Okay. So let's get into that, man. Because before I watched you got me thinking about the you talking about the life benefits.
Yeah, the living one. Everybody likes that one, Jackie.
Okay, yeah. Talk to me a little bit about that. I want to hear about this because you just sparked my interest. I definitely always thought it was about after somebody passed away.
That's traditional life insurance, right? So let's talk about the living benefits. So I like to call the living benefit like you're the beneficiary of your own policy, because typically you have a beneficiary who will receive the inheritance, or the what they call the face amount of a policy. So that usually happens while someone passes away. Whoever that beneficiary may be, they'll leave that legacy to their loved ones. Whatever the policy may be. It could be 100,000, 50,000, 25,000, 10,000, doesn't matter. But the living benefit is where you are actually alive. You get a portion of the death benefit, but there's some stipulations to go with that. All right.
Okay.
So you have to be chronically, critically, or terminally ill in order to receive a portion or even have access to that death benefit. That's why you don't have to die to get it. So you're pretty much the beneficiary of your own life insurance policy.
Okay. So let's swing this back a little bit. So like for the young people, why would someone, especially at that stage in their life, why would they want to consider getting life insurance then? Especially for
For
the
the
young
young
people. Like when
people.
I was 20 years old, I wasn't thinking, okay, I lied. My dad and my parents talked to me about it a little bit, but
Yeah.
I'm young, I'm thugging it, so I thought I'm feeling invincible,
Yeah.
you know what I'm saying? So I think I'm not gonna lie, I'll tell you my story. I had my first child at 19 years old. So I was really thinking about my child at the time.
Okay.
But I'm still feeling invincible. I was like, man, you know what? I'll come get this on the back end. I'm still young. Like, why do I need to be spewing out this money for life insurance that, 'cause what Chris Rock said, man, a just in case type situation. Why do I why do I want to, I was like, I could be doing something else with
You
this money,
could.
especially when I had a baby right now, so I can be going to spend this money on diapers.
Yes.
Why should somebody at that stage in their life, why should they be considering life
To be
insurance?
honest with you, man, the younger the better, to be honest with you, because less health conditions. So I tell people the way you buy life insurance is not with money. Just because you have money don't mean that you can just buy life insurance. You
Okay.
you buy life insurance with your age, your health,
Mm,
and your lifestyle risk. So let me go through each one. So your age, the younger the better, because technically, you know, let's just say for a whole life.
okay.
You were 19, 20 years old. So if you were to get, let's say, a $30,000, $40,000 policy at the age of, let's say 20, you're probably looking about maybe no more than, I'll just say in the ballpark figure, $50 to $60. But guess what though?
Okay.
That $50 or $60 will stay with you for the rest of your life. It
Mm,
doesn't increase, right? It only
yeah.
increases in age. So that's the
Okay.
first part. So you're young. The best time to get it is when you're young. Your health. Usually, I don't know a lot of 20-year-old. I mean, to be honest with you, no. Let me take it back. I've encountered a lot of younger people having more health conditions now, which is really crazy.
You're right. You're
You
right.
know
You're
you know what I'm
absolutely
trying
right.
to say. So some of those things
Hmm.
can knock you out. Not I don't say knock you out, but it can actually increase your premium cost. But the premium cost is how much you're paying for that policy. So, but if
Yeah.
you're young and healthy, your policy is going to stay level, meaning you're going to pay that $50, $60 all the way
Hmm.
through. And then your
Hmm.
lifestyle risk. What do you mean by lifestyle risk, Joe?
Okay.
Right?
Hmm. Yeah. So somebody like to go zip
Are
lining
you
and
zip
bungee jumping.
lining? Are you bungee jumping? Are you rock climbing? Are you flying planes as a pilot or a
Yeah.
student pilot?
Hmm.
It's going to cost you a little bit more because you're in the eyes of an insurance company. You're more of a risk because you're more likely to pretty much get hurt. Number one,
Yeah.
or you're gonna
Yeah.
die. Number two, I don't want to sugarcoat nothing. We're gonna keep it real.
No. Keep it all the way 100.
Right?
Yeah.
So those three things buy your policy. But the younger
Okay.
you are, the better you are. Let me tell you this. This is just a bonus feature for anyone who has kids or
Hmm.
grandkids. Because I know I know we're in the middle of our audience. The best time is to get your kid or your grandkid a policy is about between 5 to
Okay.
11 days old.
Oh, 5 to 11 days.
5 to 11 days.
Mm.
You can lock them in right there. $20.
Huh.
Let that.
Never would have even thought about
Nah,
that.
they don't think about that. So that's gonna say the younger you are, the more healthy you are, and the more cheaper it is.
Oh,
Yeah,
bro. Hey, man. You get into it. Listen, this is what we're gonna do. Don't give them too much too
I'm
soon,
not.
man. I gotta hit a quick lick. We're gonna hit a quick break. Hey, man, long as you're still with us, man, we're gonna bring you right back after
Yes,
this.
sir.
Hey, y'all keep it locked, man. Y'all got any questions? Hit the hotline 804-476-2306. We're gonna be back in a second with Joe Taylor, man.
Everybody,
Let's go.
Yeah,
Go. We're the real deal in digital radio. Global RnB.
we certified.
96.3.
Welcome back to the Midday Lounge, Global RnB 96.3. I told you today, man, we get into some good stuff, man. We here to learn you, as some of them people might say. I said we gonna here to teach you a little bit. So we talk about life insurance, man. I got my man Joe still with me,
I'm
man. How
here,
you
man.
doing,
I'm
Joe? You
still
still
here,
with me,
man.
man?
Thank you, man.
Hey, man, I just want you up here. I just wanted to bring you on here so we can help
Yes,
educate the
sir.
masses today, man. So before the break, you kind of mentioned, and this is
So,
one part that got me because
so
I didn't know about it. You talked about whole life insurance. So you said whole life. I said, okay, just whole life. That means there gotta be some. You gotta be some different types of other type of life insurances. Break down those different type of life insurances to us, and how they might choose the right one. They want to pick the right life insurance
Absolutely,
policy.
man. So
Talk to
that's
me
a good
about that.
question. So yes, there are different various types of life insurance. So like I elaborated earlier, so we have a whole life insurance. So pretty much think of whole life like a mortgage, right? Like you have a house, you pay for it,
Okay.
and it's pretty much with you throughout your whole life. I know mortgages sometimes you can actually and you can
Yeah.
pay off your mortgage, but guess what? You can actually pay off your whole life insurance too, if you didn't know that. All right, so you have your
Okay.
whole life, you have your term life. So term life, okay? So
Term life.
just
Okay.
how it sounds, it's temporary, okay? So we got a couple policies that
Mm.
pretty much range from 10, 15, 20, 30 years. And guess what? I bet you guys didn't know this also. There's actually a company that will actually give you 40 years of life policy.
Whoa.
Then
Didn't know that.
I just came across that product not too long ago. So you have a term life. So you think you get
Okay.
term kind of like you're renting. Okay, and usually term is
Mm-hmm.
very good for young people. Let's get back into that as well. For young
Yeah.
people, working people, you have a family, and people usually use the term life because it's a bigger face amount, which means it's a bigger amount of money that will be gifted to the family. So think
The
about your
family.
face
Okay.
amounts about 100,000 and up. Okay, up to whatever 5 million,
Mm-hmm.
whatever the case may be. So that's
Right.
your term life. You can use it for your mortgage if you have a house, if you're newly married, and you got that house, and then you
Mm-hmm.
got the breadwinner, and then if the breadwinner passes away, you're gonna have one income coming in, but you still got a mortgage, right? So
Mm.
that's your term life,
Yeah.
and then also you have what you call universal life. Okay, so your
Okay.
universal life, there are a couple moving parts with that, but a lot of people know universal life more like for like your indexed universal life. That's like that hot topic. I want to be my own bank. I want to save up money. That's
Yeah.
everyone's big one right now. So it's the index universal life. But the cool
Yeah.
thing about the index universal life is it's flexible. It's a flexible premium. So you kind of pretty much say, you know what,
Okay.
I want to put this amount of money into my index universal life policy. But guess what though? The
Yeah.
universal life policy or index universal life, that's the one. It's I think that I to be honest with you, I don't have a favorite one, but I think this one makes the most sense. And I say this makes the most sense
Okay.
because in the index universal life, the good thing about it is that you are able to participate in the market. Okay. The cool thing
Okay.
about that is that your
Mm-hmm.
cash value, pretty much aka your savings account, is in that policy. It's not directly in the market where it's going up and down like a stock. It's it's tracing it, like right.
Yeah.
It's just following the index, S&P. The Russell. The
Mm-hmm.
500 Russell. There's like different couple indexes you can follow. But the good thing about it is when the market goes up,
Okay.
guess what? You you're making some
That
money in
means
your
I'm
cash value, right? That's everybody
yeah.
likes making money.
Okay.
but
Man, you
but
ain't
but
lying
check
about
this
that
out,
one.
Jackie. But when the market is going down, you don't lose anything in that policy. You
Oh,
don't
so
you
so
don't
oh
lose anything in the
okay.
policy. I know it's kind of like too good to be true because they call it
Hey.
they call it because most of the insurance companies it's called a credited index. So you get credited with the
Okay.
market, but if the market goes down, you usually get zero. So you just don't make any money in your
Okay.
policy that year. And then the next year starts all over
Oh,
again and
okay.
you just kind of stop or start where you stopped at. You know what I mean? I don't want to get super,
Okay.
super deep because you got caps, floors, all that good stuff. But I just want to make it super
Yeah,
simple.
yeah.
Yes.
Oh, so like right now, I got me a whole life, and I want you to talk.
Okay.
I don't know if you followed.
I love whole
Hey,
life too.
I got
I
me
love
some.
I love them all.
I don't know if you follow Dave Ramsey.
Yeah, I follow Brother
At
Dave.
one point, he said whole life was idiotic to get into, and I can't remember the exact reasons because he said he said he would find it more beneficial for more people to do term life because of the amount of time. Like most people probably live to be a certain amount of age, probably about 60, 70. And so you're probably wasting more money on whole life than the term life. And like I say,
Yeah.
everybody has an opinion. So whatever you pick for your
Everybody.
life is what you pick for your life. What
Yeah.
would you say to that? Would you say that term life is probably more beneficial for because like I'm pushing 40 now. What would
Yeah.
it be whole life or term life, or just using me as an example?
Let me tell you this. I'm about to drop the bomb on you. Why not get both
Okay. Oh,
if you can afford it?
okay. Talk to me.
Because neither one is
Okay.
bad. The one that's bad is the one that you don't have when you die when your family needs money.
Man.
Right?
Yeah.
That's the one. There's no good or bad. It's just the one that you don't
The
have.
one that you don't have. You make sense with that one.
That's the bad one. So when the term when people talk about term life, because like I said, I love all policies because it's what it can
Yes.
do. All right, you're leveraging people's money. I'll get deeper on
Mhm.
that. You're leveraging people's money for short, for a small
Yes.
expense. So when I think about the term life, the way I'm sorry, your whole life and term life, the way Dave Ramsey looks at it, because there was this saying, and it still is the saying when it says, invest in term and then invest the rest,
Mhm.
right? Or sorry, well, buy the term, invest the
Mhm.
rest. So, but the thing about it is, people buy term, but they don't
Yeah.
invest
Yeah.
the rest.
Yes.
Right, that was the whole purpose of buying the terms, because by the time you get to a certain amount, a certain age, your investments
Yeah.
should match up to whatever it is that you were trying to do at that
Okay.
time. But the thing about it is, but no, not a lot of people are doing that. They're not investing it. So I say it's not a bad investment, because technically, and I got to stop even using those words. Life insurance. Listen to me, ladies and gentlemen. Life insurance is not an
Yeah.
investment. Investments are risky. What usually happens in investments? Talk to me,
They're
Jackie.
gonna be up and down. They can plummet a whole lot, and then you lose all your money, excuse me, I want to say investment, all your watch this. Just use stocks, all your assets. That's the word I want to use.
You're gonna
Yeah.
lose, but you don't
Yeah.
lose in life insurance. Why do you think all the banks put their money in life
That's
insurance?
true.
Why do you think everyone you giving money to the bank, they're putting that money, options and everything else that's allowing? That's why they can guarantee you these interest rates.
You know,
Insurance is the most conservative asset that you can put your money into without losing money.
so I already say that's insurance is I don't want to say game, but somebody taught me the game when it came to life insurance, and they said most like the Rothschilds and the Rockefellers, they
Oh,
put they
yeah.
it's just, their wealth came from life insurance and putting the life insurance inside of the trust and putting it down.
Put it in the
Yeah,
trust.
family member to family member, and every family member has to have a life insurance policy to continue to put inside that trust to give to the next person so they can keep their what's they call it, generational wealth going.
Right, and guess what though? But the two stipulations was like you can either get this money for a business or for
Yep,
school. That's it. We're not just give you
yep,
money just to give it to you.
you're right,
We're not gonna do that.
100%.
So I say all that to say, you why not get both? You get a big face amount value, because if you let's paint a
Yes.
picture, right? So usually some whole life insurances, or final expense is pretty much all the same. It's a marketing
Mm-hmm.
tool, ladies and don't get it twisted. It's just a marketing tool. So when you think of final expense costs, you don't need like hundreds of thousands of
No.
dollars. You probably need between, let's say, the average funeral cost nowadays, is depending on what state
Yeah.
you're in. It can range from about 15 to about 30,000. That's just a traditional burial. I'm not even talking about
Yeah.
cremation. I'm talking about traditional burial, coffins, everything that you think about, the service, the after
Yeah.
party.
Yeah.
If you have one,
Yeah.
but either way. But so you're looking at that. So you get 40,000 with
Mm-hmm.
that. And then listen to this though, Jackie. So when you add on a whole life, let's say you had a $100,000
Yeah.
policy. It's 140,000 that your family's going to get
Yeah.
right there.
Ooh, man, you talking to me, man.
You see what I'm trying to
Yes,
say? So why not get both if you can afford it
I
though?
know that's right.
Don't be insurance broke. I tell people that. I'm not going to make you insurance broke. I just want to make sure that your family's protected the way that you were looking to get
Okay,
done.
so that's gonna bring me to it then. How do we go about choosing the right policy and the right coverage amount? Is there like Is there a
Ah,
formula that we need to be abiding by? Like what we do with that?
you know what the
What's
formula
that?
is? What is it that you're trying to do? What are you trying to leave?
Oh.
Besides, the legacy to your
Mm-hmm.
family. So usually, when it comes to, especially when it comes to term insurance, you want to take your
Okay.
income, whatever that income is, you times it by 10, 15
Okay.
years. That'll be your insurance amount that will literally secure
Mm-hmm.
you while you're
Yeah.
alive, and then also that'll be that generational wealth to your
Yes.
family. So you take what you make, times it by 10, 15 years, whatever the case may be, and that'll be your overall coverage, because you got to take into consideration if you have
Mm-hmm.
kids. If you got young kids, that's going to take care of any type of
Yeah.
daycare. The house, the mortgage. It's all pretty much the same. Let's talk about this though, and this is what I get upset when especially I'm not gonna lie. Can I be
No,
real with you
talk
on the
to me.
show? It's
Yeah.
us, right? We say one thing. Oh, I want to leave generational
Mm-hmm.
wealth. I want to do what the Rockefellers did. I want to be my own bank. I want to make money. I want my kids to have everything. But the number one thing that we, as majority of people do, they get mad at the
Mm-hmm.
cost. They don't want to pay the
That was me
cost,
at 20.
right? You know what I'm saying? And it's okay. You don't want to pay the cost, but then again, it's like, but what are you leaving your family with? Not just besides trying to come up with money for the
Yeah.
burial and everything else, aka GoFundMe. Stop doing that. GoFundMe is not a life insurance
No, it ain't.
policy. So
Burden.
you're leaving your family with debt. Why do people forget about that part,
Yeah, you
Jackie?
leaving with debt, leaving with a burden. Yeah.
Yeah, like don't be a burden to your
Yeah.
family.
I was just telling my co-host last week, because we talked about we had a show talking about funerals. Actually, I have one of my homegirls. I'm
Ooh,
interviewing one of my homegirls next week, as far as, because she's a mortician. She works for a funeral home. All right, so we
oh,
talk about funerals and how family members always leave a certain amount of burden and debt on their family. So I'm gonna tell you my side of the story from the military standpoint. At one time, when I was doing the military thing, we have something called death gratuity. So they give you 10,000 off the rip. Then they give you
okay.
I automatically have a life insurance policy with the Army. As long as I'm active duty, I have a life insurance policy
Hmm.
of 450,000. All right. So I said, you know what? When I thought about how I wanted to set up my life, was I said, okay, once that I get out the Army, once I'm retired, that $10,000 that the Army was giving me while I was active is gone, right? That
Done.
450,000 is gone, right? So I told my financial advisor and my life insurance coach. I was telling him, I said, look, I want to put $10,000 aside, just like I was in the Army. And so once I get out the Army, I
Hmm.
say, take this $10,000, and this is what I want for my funeral costs. Take this money right here. I want all this to go towards me putting into my, like I said, I have a whole life insurance policy. Put this for the whole life
Yes.
my whole life policy. I have 500 right now that I'm working with. I don't care. I put it on there. Y'all can come look for me. Whatever. Just don't try to kill me yet. but but that's the policies I wanted to put in place. I wanted to, like I say, I know life insurance can go towards the burial, but I wanted to have two separate things. I wanted this to go to to my burial, and I wanted the whole 500 to go to with my family and what they need to get done for themselves. I didn't want them to have to be taken from it. That was me though. But that's how I was educated. But I know everybody's lifestyle is different.
And that's good. And the thing about it is, you're not just looking just for the burial. We gotta just stop being. And I'm getting
Now,
happy now.
talk to me.
We gotta stop looking at how much things
Hmm.
cost and think about the value that is going to, you know, be able to not just. God, we can't replace
No,
you.
no, understood.
We can't replace you. But why let your family struggle?
Exactly,
And just give them just enough just to pay for the
exactly.
burial. That's good enough for them. Are you
Nah.
kidding me? That's what your family. That's the value of your family. That's what you're telling me. Let me show you
Hmm.
something, right? So when I do this every day, all day. I talk to people, and it just saddens me. It bothers me, and I got to be professional
Yes.
about things. But sometimes I got to get out the professional mode,
Hey,
and I got to be real when I talk to
keep it
people,
100
man.
with the people, man. Come
Right?
on.
Especially our community, because it seems like, why should I have to fight you or convince you to protect your family? Why should I have to beg you
Exactly.
to protect your
Yours.
family? You know what I'm saying? I'm one of the because technically I'm not a financial advisor because that's a whole
Yeah.
nother ranking above
Yeah.
mine,
Mm-hmm.
right? But I'm a financial professional.
Gotcha.
Does that
Yeah.
make sense? So, because I can't advise you how to use your stocks and bonds and mutual funds, I can't do
Mm-hmm.
all that. But I can advise you how to prepare your family for
Yes,
generational
sir.
wealth. So when I look at things, when I talk to people, and they got to say, "Let me think about it, Joe."
Uh,
What is there to think about? So you're telling me, let me get this straight, because this is how I am. I'm gonna act like you're a client
yeah.
right
Yeah.
now on the phone. Not even a client. Let's just say a prospect, and you're calling me. You want life
Mm-hmm.
insurance, and then you hit me with,
I
"I
gotta
gotta
think
think
about
about
it.
it." All right, perfect. That's not a problem. But let me ask you this though,
Mm-hmm.
Jackie. How would your wife feel about you putting extra protection and coverage for her for the bills and the mortgage when something does happen to you?
I think I would like to think that she'll be she'll be satisfied knowing that those things are taken care of. Yeah.
Right. But let me ask you a question. But Jackie, but if you go to
Mm-hmm.
her, right, and you want her to, you're telling her this is what you're trying to do, but she doesn't want you to get that policy put in place because there's extra
Yeah.
bills. What about she tells you
That's
no?
what I was. Hey, that wouldn't make no sense to me. Exactly. That's hey. You gotta plan for the future, man. You gotta plan for what ifs, the things that we can't take care of. I'm the kind of
But
yeah, man. I
it's,
don't understand that thinking. I'm with you.
I got to think about it. I got to talk to my wife. I mean, like my wife. If there's anything like the other ladies that may be on the call that have a husband, and if somebody came to you and was about to help her, it's really for her.
Yeah,
It's not even for you. It's
for
for
her.
her. You think she's going to tell you
Nah,
no? Don't get it. I don't want it. Let me be broke. Let me
don't say how
struggle.
much is it.
How much
Hey,
is it?
we're gonna add it to.
Let's move some
Yeah, that's
stuff around.
exactly what it was. I ain't gonna lie. I ain't tell my wife. I just went ahead and got it. I said, "You got you're taking care of it in the timely demise of my death or whatever." That's what I told her. I ain't give her option.
I commend you.
I ain't give her
I
option,
commend
man.
you.
You know,
That's
I had to
good.
do it like that.
But
Hmm.
it's very little few, man. If like I said, I talk to a lot of people, and it just bothers me on the inside.
Yeah, I can see why.
And I got 5 kids, man. It's like me telling my wife, "Nah,
Nah,
you ain't
I
worth
need
it."
I need her to know that she worth it. I need my kids to know that they was taken care of before they went. I think when I sat down with mine, man. Shout out to Doug. I'm gonna keep shouting him out. That was mine. When he when
What's
he
up?
when he sat me down, I just said because he does financial advisor and he does my life insurance. So I said
Hey,
what I said I don't really care about. I'm not trying to live high on the hog. I just want to live comfortable. Put me in a position
yeah,
where I can be able to afford this right here, and I can afford this life insurance policy, no matter what. That's the only thing I want. That's what I told. I said you advising me. Tell me what to do, and I'll do it. That's how I say. Whatever plan we come up with, that's what I'm going with. I ain't asking no more questions other than that. Now, if you can say I'm foolish, whatever, but I said just set it up so my family my bills are paid. I'm living comfortable because I'm not gonna
yeah,
be rich right now, but I said I'm living comfortable. My family's comfortable, and after I pass, make sure I still have this money right here set. So after I pass, they're still
good.
comfortable. So you know what, man, we gotta hit a quick lick in a break in a second. But 30 seconds,
Yes, sir.
I'm gonna give you 30 seconds or less. For people that's still on the fence about their future, why should they go ahead and get this? Why should they go ahead and do this life insurance, man? What's some things they should remember when they think about going to get life insurance?
I mean, to be honest with you, I mean, how important is your
That's it.
family? That's it. How important is your family? And get it while you are in good health. And even if you're not in the best health, don't worry. There are policies that are out there for
Mm-hmm.
you. There's a policy for everybody. Question is, do you want to pay for the policy?
Ooh, now we're talking. Something to think about, man. Joe,
Some,
I appreciate you spending time with us today, man. Where can
man,
where can
thank
the people find you at social media? What's your handles, man?
Man, you can find me on all social media on Joe underscore the insurance agent. That is Joe underscore the insurance agent. That is on TikTok and it is on Instagram.
Okay, man. Hey, Joe, we appreciate you, man. We're
Yes,
gonna we're gonna
sir.
have to get you back on soon, man.
I hope I didn't scare
Nah,
nobody.
nah. I think they're well for man. Y'all got any questions, man? Make sure y'all hit Joe up and make sure y'all hit the hotline
Yes,
eight zero
sir.
four 476 2306. We'll be right back with a couple hits.